In this video, we're going to go over some managerial accounting problems. Specifically, we are given the information here about XYZ manufacturing. These are just some cost information associated with its operation for 2021. Using this information, we're asked to prepare a statement of goods manufactured and sold, as well as the income statement. Now, when I'm working these problems, what I like to do is I use this column here to actually put in the data. So we were told that they have a 30% tax rate, so we put that in. We're told that their raw materials were $42,000. So the reason that I do this is so that I can then reference the cells. And again, I can either put them in column A for some things like that, but for this particular problem, it'll actually make more sense if we put them over here, because some of the costs incurred I'm going to need to break apart into production costs versus period costs. So we just go through the data and put it in as we come across it. And we'll do a little bit of analysis as we're entering the data. Some of it is pretty straightforward. There's nothing really to analyze. Like, these are just straight numbers that are told to us. So we enter these numbers. Now, as we're going through the costs that were incurred, we need to look to determine whether they're period cost or production cost. What I do here is I actually enter the data straight as I'm given in the problem statement, and then I will go back and have Excel do the math for me. So again, we're just going straight down and entering this data. Okay, and so now that we have the data so that we can actually reference it, we will go through and figure out, okay, is this a period cost or a production cost, or is there some allocations that we need to be made? So raw materials, that's an easy one. That's production cost. Advertising expenses are period cost, so we can just reference that cell. Do that here as well. And this way, if we ever want to just change any of the data later, we can. Warranty expenses are a period cost. Direct labor is a production cost. Indirect raw materials are also a production cost. Indirect labor is we know a lot of these are going to include a production cost component, so we'll cheat just a little bit. So we know that that is a indirect labor. Now for the utilities, they told us some of this pertains to the factory of the total. So we know that the total, we know that 10,500 pertains to the factory. So then we know that the period portion would just be the subtraction of that. a lot of these coming up are going to have period components as well. So for the rent, we know that 16,000 pertains to the factory, and go ahead and calculate that out. 4,000 for insurance. For supplies, we have 2,400. Delivery truck expense. Turns out that that's just a straight period cost by itself. Then for the depreciation, we had 14,000. That was for the factory. For the property taxes, 1,800. And then salary and wages, all of that is a period cost. So now we have all our data separated out. We can then go over here and start creating our statement of goods manufactured. Again, I have my heading, tell me what it's for. So to do this, I've already got the lines in place. You can see I've already done this problem. But these statements follow a specific format, and I don't memorize it. I just look it up when I need it. So I know that the raw materials inventory for the January 1st, or the beginning. Let me make sure all of these have the right indenting. Okay, and then I'm going to have where my raw materials purchased. Right, and that ends up giving me the raw materials that are available for use. And from there I'm going to deduct the raw material inventory at the end of the year. So then that will tell me the raw materials that were used. So I can go ahead, fill in this information. So the raw material on January 1st, given. Raw materials purchased, we were told. And so the raw material that is available is the sum of these. Right, so the raw material at the end that we didn't use. And so that the actual raw material that was used okay, now from there we're going to deduct the indirect raw materials that were used. And then that's going to tell us the direct materials used. So this number we were told what that was. So then this needs to be to the subtraction. Now we need to figure out what was the direct labor. Direct labor, and then we'll do factory overhead. And now for the factory overhead, we're going to have indirect raw materials. Indirect labor utilities, rent, insurance, supplies, depreciation, property taxes. All right, and then that will tell us the total for our factory overhead. And we know that the raw materials, we were told this information. Indirect raw materials was 9,000. Indirect labor was 5,800. Utilities portion we've already broke off for production cost to be 10,500. The rent portion we broke apart. Insurance, we were told that was 4,000. The supplies, 2,400. The depreciation component for the equipment was 14,000. And then we also know that the property taxes were this much. So what was the total of our factory overhead? Oops, I forgot the equal sign there. Now, we know that this tells the total manufacturing cost added in the current period. It's just going to be the sum of these. And I just realized I forgot to include the direct labor up here. So add the direct labor. Okay. Now from here, we need to add the work in progress inventory at the beginning of the year. And then that'll be the total manufacturing cost. Alright, so we know this number, our work in progress inventory, the assumption being that any material, any work in progress at the beginning was completed. Okay, so we add those two together. Now, as up from just about all of these problems, you're going to deduct whatever your inventory at the end was, because that material is still in progress. You haven't sold it or anything like that. First, so we know that the ending inventory at the end, the work in progress, 90,000, and then that will tell us the cost of the goods manufactured. So once we do cost of the goods manufactured, now to arrive at our total cost of goods sold, we need to account for the finished goods inventory. We've accounted for our initial raw materials, we've accounted for initial raw materials, we've accounted for overhead, we've accounted for the work in progress to cover manufactured. Now we need to cover, okay, what was our change in finished goods inventory to help us arrive at a cost of goods sold. So to this we're going to add the finished goods inventory on January 1st, which again, the assumption being that we sold that material throughout the year. So that'll tell us the cost of goods available for sale. So we know that this, again, this was given. And these inventory numbers, they may have been, they would have gotten through either a count or something of, some other kind of inventory method. All of these numbers, for the most part, with the exception of depreciation, that would probably be a physical receipt for all of your cost incurred. But then your inventory, again, that would be something that you could just count. Now from here we need to deduct the finished goods inventory at the end of the year, because this material wasn't sold, so it cannot be since we didn't sell it, it can't be considered cost of goods sold. It's just part of our inventory. Show up on our balance sheet. Okay. Do that math. So we know now we have completed part 1 of the problem, where it asks us to do the statement of cost of goods manufactured, which will be this number right here, and then the cost of goods sold be right here. Now the second part of the problem asks us to prepare an income statement. So with income statement, we'll follow a basic format. So what was our total sales to start with? From there, we'll need to subtract out the cost of goods sold, and then that'll give us our gross profit. Okay, let me go ahead and make sure all of these have the correct indent. Sorry about that. Gross profit. So for sales, we were told there were 500,000. Cost of goods sold, we just calculated. So then the gross profit will be sales minus cost of goods sold. Now we need to figure out what were the operating expenses. All right, so we're going to have, just looking over here at the list, as we run down through it, we'll see we had advertising, warranty. We're basically looking for all the numbers in the period cost. So looking over there, we can see that we have an advertising, warranties, utilities, rent, insurance, supplies, some auto expenses, depreciation, property taxes, and then we had salaries and wages. So we know what they are, so now we can go and just reference them. Right. Utilities. Since we did them in order, we can just drag them down. Utilities, rent, insurance, supplies, auto, depreciation, property taxes, and then salaries and wages. So from there, we will then know our total operating expenses. Okay. Now, so this tells us our operating income. You may hear this referred to as income from operations, or EBIT, income before interest and tax. We're not told about any kind of excuse me. We're not told about any kind of interest on here, so we won't worry about that. And we're going to have an income tax expense, and then that'll get us to our net income. Yeah. For the operating income, it's going to equal our gross profit minus all these operating expenses. And then for the tax portion, we will take our operating income and then multiply it times our tax rate of 30%, and then subtract the income tax from the operating income. And that gives us a net income $72,223. I know I didn't explain where a lot of these came from because the income statement is pretty straightforward. It's something you learn in basic accounting. What are the income components of an income statement? The statement of goods manufactured and sold. Again, this format is available in just about any managerial accounting textbooks. I don't memorize these. I have them, a template that I look at when I need to complete one. The data, the real part of this problem is going through and just organizing your data and knowing, okay, what's a production cost and what's a period cost. That's the actual analysis that takes place in the problem. The rest is simply putting it in the right order to create the various statements that you need. All right, well, that takes care of today's example. Thanks for watching. Bye.